that they're investing. So you take the risk to realize the growth. Otherwise, you just don't take the risk, right? If you don't need if you have plenty of capital to deploy, there's no reason to take any risk. No, they're less expensive the closer you get to expiration. If I buy an option one day and sell it the next, would that be day trading? No. Um, if you for pattern day trading, if you buy an option on Monday and you sell that option on Tuesday, you do not get a PDT violation. Options have a settlement period of T+1. That goes for the funds that come from options as well. What's the argument to buy lower strike prices in Feb? If we most, they have to be hedged more. So the lower strikes have a higher delta. They both have a place. Right? Higher strikes have more room for growth. As their delta goes up. So it's an interesting position. They have to be hedged on the near the money and slightly out of the money, right? Calls more than they have to be hedged on those far out of the money calls. But by hedging those nearer the money calls, that drives the delta up, which then forces them to hedge the out of the money calls more and more, right? Ramp, delta, or gamma ramp, right? That's the exact action that drives the movement of a gamma ramp. That's what we saw last January play out. That's why we constantly went up, because of that massive amount of open interest. And very likely they did not hedge appropriately, but it didn't matter because everyone cash settled their options. So those people that had those $20 options, right? Those $20 contracts that went to, when the price was at $400, if they'd exercised, they would have demanded a share settlement for that contract, which would have forced the market maker or whoever wrote the call to go and get them those shares at market. But instead they cash settled, which allowed, guys like Citadel to internalize those orders. So they lost money, right? But they didn't lose as much as they would have if they'd had to go try to buy those shares at market, right? Because buying 100 shares at market multiple times over is going to drive the price further up. And then what you get is you get the, and you get that sentiment that everyone has that, oh, it's different now. Things have changed. Options are more expensive. That's bullshit. GameStop's more expensive, right? So if we grew 2,700% last January, there's no reason we won't do that again. Right? So that you're looking at these like $500 strikes and you're like, but when people were buying $20 calls on GameStop, the fucking stock was trading at like $8. So you're talking about a $400 strike being super far out of the money, but when the stock was trading at $8, a $20 call was super fucking far out of the money. And but they still realized that same amount of growth. But if people hadn't cash settled those options contracts, if people had exercised those contracts, we would have gone to the moon. We'd already be there, farming our tendies. Yeah, I'm clipping it.